So let us take a look at day trading first. What is actually day trading? Day trading means that you open and close a position on the same day. That could be a stock or a share. It could be a currency pair or even a cryptocurrency, for example. We do this to exclude an overnight risk. It could happen that there are certain unpredictable price jumps overnight, and especially in markets that are not running 24 hours, there can be gaps between the close price and the open price on the next day. And these risks can sometimes not be protected adequately with a stop loss. So if you're a day trader, you try to protect yourself from these overnight price jumps. Day traders normally do their trades on the 5-minute, the 10-minute, 15, 30-minute chart, the 1-hour chart, or even the 4-hour chart. Of course, it does not make sense to use the daily chart if you're day trading and if you want to open and close a position on the same day. Important is that you're using an instrument with a lot of liquidity so that you can buy and sell immediately. If you need to, you want to be able to sell on the same day. You need an instrument that many people trade. This could be a forex pair that has high liquidity, or Bitcoin, for example, in cryptocurrencies. And also as day trader, you want to have a lot of volatility in the market. As day trader, you need that volatility or you are quite limited in terms of what you can do. There are, for example, some stocks and shares that can make quite significant price jumps during the day, such as 5 or 10%, or even cryptocurrencies. Yeah, you're looking for these instruments as a day trader, as otherwise, if you don't get the volatility, then you won't be able to participate in price movements that allow you to make sufficient profits. You also need to understand that if you're a day trader, every trade costs money. There are day trading fees. Your broker or your exchange will charge you a fee for every trade. This is one way of how the exchanges and brokers earn money. The higher your trading frequency, the higher the fees you have to pay, and these also will reduce your profits. It's just important to be aware of them. What you also need as a day trader is usually a real-time data feed. You need charts that allow you to see the prices in real time. Now, these days, this is oftentimes included, but make sure you know if you have one, when you use a certain exchange or a broker. When you invest or when you do swing trading, you don't necessarily need such a real-time data feed, but as a day trader, this is quite important. This can cost you, depending on which instruments you are using and which broker or exchange, between 10 and 50 US dollars per month. You should also not underestimate what day trading means for you on a daily basis in terms of time commitment. As a day trader, you need to spend a lot of time in front of the screen. This is actually nothing you can do part-time, because if you're in a full-time job, you won't be able to check the stock market or the crypto market or the forex market prices while you are at work. You should not underestimate the time this takes. So now let's talk about swing trading. What is actually swing trading? So if you do swing trading, you hold the position open for various days or weeks. You normally don't close it on the same day that you open it, because that would be day trading, as we've just said in the day trading section. And you try to participate in certain larger price swings. You can trade swings with or against the trend direction, of course, and that usually takes place on the 1-hour chart, the 4-hour chart, or even on the daily chart. The advantage of swing trading is that you don't necessarily need a real-time data feed, and as I said, some brokers charge for that. However, you also have different costs. So for example, if you're a swing trader and you leave your position open for various days or even weeks, that could potentially cost you a fee depending on the market you're trading, depending on your broker, and also depending on if you use leverage. Because if you use leverage, then you basically borrow money from your exchange or broker and they will charge you a fee for that. Now that fee is very low, but still you need to consider that fee. So swing trading obviously is more attractive than day trading for part-time traders. If you are a part-time trader and if you have a full-time job, as a day trader, you would need to watch the market pretty much all day, to make sure that you understand when to enter and exit the market. As a swing trader, not necessarily. You don't need to spend that much time watching the charts. Okay, so now that we've talked about day trading and swing trading, let's talk about position trading. Position trading is even longer term than swing trading. Here you leave a position open at least for weeks or even months. it is not buy and hold. You do trade, but you do have a longer time horizon as well. So you often use the daily time frame or even the weekly one. One disadvantage of position trading, and it's important to be aware of it, is that you usually use larger stop losses. That is the distance between your open price and your stop loss when the stop loss gets triggered is larger than when you do day trading or swing trading. This has to do with the fact that when you use larger time frames and when you set stop losses, you look for previous lows or important support levels on the chart and technical aspects or technical levels below which you can set your stop loss. And when you use the weekly chart, for example, these are usually further away. This could be, for example, a stop below a previous weekly candle. And here the distance is, of course, or can be quite large compared to, for example, if you just use the 4-hour chart or the 1-hour chart and when you do day trading. That means you may need more funds when doing position trading. It also means that you will experience larger drawdowns, that is larger losses, at least on paper, larger price reductions, and you might experience more stress because of this, because the price might get into the direction of the stop loss and you might obviously experience that drawdown of the price temporarily at least. The advantage is, however, that it does not take much of your time. So it might be enough to check your trades once per day, maybe in the evening after work, or maybe it is enough if you check this on the weekend only. Another advantage is that you have relatively low fees because, of course, you trade less often. So position trading together with swing trading can, of course, be used by everybody who likes to do trading part-time.